Morning. We'll start revising which one? Branch account. Before we start with branch accounts, under dependent branch system, three methods of preparing accounts. What are the three methods? Debtors method, stock and debtors method, and which method? Final method. Debtors method we had seen, each branch is treated as a debtor. Two balance brought down, all the opening balance of assets at the branch, goods sent to branch, all the cash sent for expenses. Likewise, whatever is received from branch, we credit the giver. Then we record the closing balance of assets. If goods are sent at invoice price, we remove the profit. How to remove the profit? On the opening stock, we put buy stock reserve. On the goods sent to branch, we put what? Buy goods sent to branch. Then on the goods returned from branch, we remove the profit element on the debit side. Then on the closing stock, we remove the profit element on the debit side. Okay. So in a branch accounts question, what can be missing is finding out what is the collection from debtors. You can prepare debtors account and find out. And sometimes direct payment also may be made by customers. Cash sales also will be included. Then sometimes goods sent to branch may be missing. That time they will give you opening stock details, sales details, closing stock details, and other things. So based on that, we have to work out what is the goods sent to branch. Sometimes closing stock may be missing, where you have to prepare a stock account or a working note to find out which one, the stock at invoice price or whatever. Then in the system, what is not recorded, we had seen under the data system, what is not recorded? Transaction between head office and branch only will be recorded. Other outside transactions are not recorded. Like bad dates, discount allowed, sales returns, wastage of stock are not recorded under which system? Data system. Just observe this for about 2-3 minutes. Then we'll go for doing a question based on a data's method. Okay, multiple times they asked question based on which method? Data's method. Even December 2024 question paper, you can find branch accounts under which system? Data system is there. Just go through the display for about 2-3 minutes. Then we will continue to the, problem based on the branch accounts. Just go through. What is the data required for preparing branch account? All your opening items like stock, debtors, etc. Then goods sent to branch, cash sent for expenses. On the credit side, what all we require? Goods returned from branch, cash remitted from branch. What they will remit? Cash sales, collection from debtors, and direct payment by what? Customers. Then closing balance information we require. If the goods are sent at invoice price, we remove the profit element in the opposite side. Shall we? Let's go to the December 2024 question paper. Look at this. They started a branch on 1st April 2023. It's a newly started branch, so no opening stock, opening data will be there. So all these opening balances will not be there. No opening balance of assets and liabilities will be there. Goods were sent at 20% above cost கொடுத்திருக்காங்க. 20% above cost கொடுத்திருக்காங்க. So cost of goods sent is given now. You will add 20%. 50,000 plus 20% you will take it. Goods received by branch till 31st March is given. Invoice price is given. So what is a goods sent to branch? 50,000 plus 20%. If you add, you will get how much? 60,000 sent. In that, what is received? 54,000 only is received. Upper balance 6,000. Goods sent but not received. There is no opening stock. Goods sent transit. It will be what? Goods in transit. Then credit sales is given, closing balance of debtors is given, bad debts are given, cash remitted by branch is given, cash in hand at the end of the year is given, cash in hand at the end of the year is given, cash remitted by head office to the branch is given, closing stock of debtors at invoice price is given, expense at the branch is given to us. They ask you to prepare branch account. Closing stock also given to us in invoice price. Shall we? Start. Goods sent to branch, invoice price we want 50,000 plus 20%. How much it will be? 60,000. Cash sent for expenses. This head office has sent for expenses. How much head office has sent? How much head office has sent for expenses? Cash remitted by head office to branch during the year is given. How much? 3,000 is given. The closing balance of cash will come as by balance creditor. 2,000. Closing balance of debtors are given. What is the closing balance of debtors? 20,800. Closing stock at branch is also given to us at invoice price. How much? 6,000. No other asset, I hope. I hope goods in transit is there. Okay, we sent 60,000, delivered is only 54. Now, how much? 6,000 will be there as goods in transit. Any goods returned from branch? No goods returned from branch. Then no liabilities are also there. Then cash remitted from branch to head office is given. Cash remitted from branch to head office is there. How much is there? 43,000 is there. So we have to remove the loading. No goods returned. No goods returned by branch. No goods returned by branch. Stock reserve on the opening stock. There is no opening stock also in this question. It's a newly started branch. So no opening stock. On the goods returned to branch. On the goods returned to branch. How much is goods returned to branch? 60,000 into 20 by 120. 10,000. On the goods sent to branch, loading on the credit side, 10,000. Then closing stock. What is the closing stock? 6,000. In transit, how much is there? In transit, how much is there? Total 6,000 in the go down. In transit, how much is there? 6,000 into 20 by 120. How much? 2,000 will come. Whether bad debts will be recorded in the branch account? No. Whether credit sales will be recorded in branch account? No. So, cash collected from customers, we need not work out. Why? Because they have already given cash remitted from branch to head office already given. Remittances are already given. Yeah, what they will remit? Whatever is collected from customers plus the cash sales they would have collected. That's it. This is which paper?
December 2022.
December 2024 question paper. Take it.
Sir, to stock reserve, debit side, everyone which position.
Stock reserve, there's a closing stock and goods in transit. Both will be at invoice price. So we remove the stock reserve on the debit side.
Okay.
There's no opening stock because it's a newly started branch. It's a newly started branch. Take up this. Shall we? Have we taken over? Shall we proceed? Read the ICAI question next. I request you to read the full question in full, then we will solve. What is the opening stock? 25,000. Debtors 10,000. Furniture 6,000. Opening petty cash 1,000 available. Prepaid insurance at the beginning of the year 300 கொடுத்திருக்காங்க. Salaries outstanding at the beginning of the year. All these are opening balance of assets and liabilities. Then goods sent to branch is given, cash sales is given, total sales is given, which means remaining is credit sales. Petty expenses are given, discount allowed to customers is given, cash received, cash paid directly by customer to head office is given, goods returned by branch is given, goods returned by debtors are given, cash sent for branch expenses, rent, salary, petty cash. Insurance is paid up to June month. Insurance is paid up to what? June month. We are on 31st March. So April, May, June, 3 months prepaid is given. Goods costing 2,500 was damaged in transit. Sum of 2,000 was recovered from the insurance company. Depreciate furniture at 10% per annum. Commission is 5% of net profit after charging commission. 5 by 105. Net profit you have to work out. 5 by 105 you have to apply. Goods are sold in the branch at what rate? Cost plus 100%. So what is missing in the question? Closing stock is not given. Closing debtors are not given. Closing furniture after depreciation we have to work out. Closing petty cash we have to work out. Prepaid expense at the end of the year we have to work out. Salary outstanding at the end of the year we have to work out. Please remember they paid 4,000 per month salary, 48,000, which means this 4,000 is not paid. Outstanding amount is not paid. Current year salary only they paid. 4,000 is not paid, which means closing balance of outstanding salary will be 4,000. You understand? 4,000 per month, 48,000 they paid. What about this outstanding expense at the beginning of the year? What about outstanding expense at the beginning of the year? That is not paid. Prepaid insurance at the beginning is 300. At the end of the year, we can work out 1,200 into how many months? April, May, June, 3 months prepaid. 300 rupees, closing balance. Rent 9,600, they paid. There is no outstanding amount at the beginning of the year. 12 into 800, 9,600 will come. So what and all is missing? We need closing stock, closing debtors, closing balance of furniture and other details. Here, closing assets are missing. We need to work out. Start. computation of closing balances. What is opening stock given? What is opening stock given? 25,000. Debtors 10,000. Opening cash 1,000. Furniture then prepaid insurance. How much? You can directly record all these things in the outer column itself, no problem. Branch liability, that outstanding salary is there. How much? 4,000. Then closing balances we need to work out. We'll see. We'll do the working and we'll come back to it. All the working we'll do, then we'll come back to the main answer. Okay, start. Which account we have to prepare first? Branch debtors account. Branch debtors account. To balance brought down. To balance brought down. What is the opening balance given? 10,000. Opening balance 10,000. Then cash sales 2,70,000 given. Total sales 3,50,000 is given. So what will be the credit sales? 3,50,000 minus how much? 80,000. Then what else will come? Goods returned by customers. Goods returned by customers. Buy sales returns. How much? 1,000. Then by cash received, how much? What is the cash received? 65,000. By cash paid to head office. Customers directly paid head office, how much? Customers directly paid to head office 5,000. By sales returns at the branch, how much? Sales returns 2,000. Oh, 2,000, sorry. Then anything else? Any bad debts? Discount allowed record. Discount allowed 500. Then anything else missing? Tally this and find out what is the closing balance. What is the balance? So this will be recorded as closing debtors 17,500. Then we need to prepare petty cash account to find out the closing balance. What is the opening balance? Opening balance 1,000 is given. Head office, how much head office has sent for petty expenses? By expenses, how much we spent? Then by balance carried out, the balancing put 800. So closing balance of petty cash also we worked out. This 800 we worked out. What is the next one? In the question, goods are sent at cost or invoice price. இங்க கொடுத்துருக்கோம் அப்படின்னு. அது sales. Branch is selling the goods at cost plus 200%. 100%. That is sales is cost is 100, na sales will be 100% extra. Is there any way given that goods are sent at invoice price? No. We can do a statement. What is opening stock? 25,000. How much of goods sent? 2 lakh? 2 lakhs or 2 lakh 50? 2 lakhs. Goods sent 2 lakhs. Then goods are sent 2 lakhs. Then look at this. Goods costing 2,500 was damaged in transit. Less destroyed. Destroyed in transit. How much? 2,500. Less we want cost of goods sold. Cost of goods sold, we can work out based on sales. What is the cash sales given? Plus credit sales also.
Yeah.
Cash sales plus credit sales. Cash sales 2,70,000. Total sales given. Okay, total sales itself is given. 3,50,000 is given. Adale, how much is returned by customers? How much is returned by customers? 2,000 returned by customers. Net sales. Other stock returned அப்புறமா adjust பண்ணி. Net sales. What is the net sales? 3,48,000. This is our net sales. The sales is made at cost plus 100%. Simple. If cost is 100, we add profit 100. The sales would have been how much? 200. If the sales is this one, what is the cost? $100 by 200. How much you get? That is the cost of goods sold. That is the cost of goods sold. 1,74,000 cost of goods sold. Then what else?
100 by 200, sir.
1,74,000. Then less goods returned back to head office. How much of goods are returned by branch to head office? 2,000. This is like inflow to the branch minus reduction in the stock will give us closing stock at cost. What is the closing stock? $46,500. Salary opening balance outstanding இருக்கு. Outstanding salary how much is there? 4,000 இருக்கு. Current year you have to pay 12 into 4,000. 12 into 4,000 how much? 48,000. But we have paid only 48,000. That means closing balance outstanding will be equal to 4,000. Next, insurance paid up to what date? 30th June. That is 3 months prepaid. So how much prepaid? 1203 by 12. How much? 300 prepaid insurance.
Sir, outstanding is paid for only 11 months, no, sir, not for 12 months.
It's given salary 4,000 per month, 48,000 paid. There is 12 into 4,000, 48,000 paid. So we should have paid 4,000 plus 48, 52,000 we should have paid. But we paid only 48,000, means still some rent, there is some salaries outstanding.
Okay, sir.
Next, let us start with which accounts? Branch accounts. Have you taken up the workings? எடுத்துறீங்களா அது? Goods are sent at cost price. There is no invoice price given. Only the sales is at cost plus 200%. But head office is sending the goods at what price? Cost price. Those who completed, please start with the main answer, branch accounts. Shall we? Opening stock, opening debtors, opening cash, opening furniture, prepaid insurance, we recorded. Goods sent to branch at cost is only given. What is the goods sent to branch given? 2 lakhs. Head office paid expenses. What are the expenses? Petty cash. How much is sent? 2,200. Then what and all they paid? Rent. How much they paid? 812. I hope they paid for the 9,600. Then salary 48,000. Insurance 1,200 they paid. No, cent only you have to take it. Cent எவ்வளோ? Outstanding salary will be there. It will come as closing liability. How much outstanding salary? 4,000. Closing stock we worked out. What is the closing stock? 46,500. Prepaid insurance. Petty cash also we worked out. Furniture, closing assets. Minus 10%. Opening balance was 6,000. They asked you to depreciate by 10%. How much it will be? 5,400. Then cash sales. What is goods returned from branch? Anything is given? 2,000. Cash sales. What is a cash sales? Credit sales is 80,000. Cash sales given 2,70,000. Collection from debtors also would have been remitted. How much? Then direct payment by branch debtors. Then anything else? Anything else receipt on behalf of the branch? Think பண்ணுங்க இருக்கு. Last line பாருங்க. Sum of 2,000 was recovered from which one? Insurance company. Insurance claim received. All these things would have been received by head office on behalf of the branch. 2,000. What else? Anything that we missed out, just tell me. Tally and find out the rough balance. To commission to manager, we have to pay. Total of credit minus all the expenses so far. Total of all the credit items minus all the expenses so far. This is profit before charging commission. But commission is given after charging or before charging? After charging, what will you do? 5 by 105. So 5304.761. Tally this, you will get the net profit. Any doubt in it? Overall. Live online friends, have you completed? எஸ் கேளுங்க.
பிரான்ச் அக்கௌண்ட் கிரியேட் பண்ண சொல்லி கேட்குறாங்க. அந்த மாதிரி எதுவும் மென்ஷன் பண்ணதே சைலண்டா இருக்கும்.
எதுவுமே கொடுக்கலன்னா ப்ரிப்பேர் பிரான்ச் அக்கௌண்ட். ஆக்சுவலாக ஐ forgot to type that. Prepare branch account in the books of database.
ஓகே.
Don't go to the next question. We'll learn or we'll revise stock and data system, then go to the question. Next question we'll solve it sometimes later. Next method is which method? Stock and data method. Shall we? We'll move under stock and data method. Wait, under stock and data method, how many ledger accounts are maintained? Stock separate account, data separate account. Then we remove the profit by preparing what? Branch adjustment account pannu. Then expenses account and which account? P&L account. We'll recorrect and we'll proceed. Just to recollect what we have done in the regular class, data's method is not having a control over what? Stock and data. So we prepare a separate account under stock and data's method. Prepare data's account. It is same like the working note that we have done. To balance brought down. To branch stock is nothing but the credit sales. All bad debts discount allowed we record. Sales returns we record. Cash collection we record. Then we get which balance? Closing balance. Then we prepare a separate stock account. Opening balance. Goods sent to branch, any customer returns, then surplus in stock, goods transferred from other branches. Debit side items, out, what is the logic? All inflow to the branch, it will increase the stock. Cash sales, credit sales, goods returned from branch outside to head office, normal loss or abnormal loss, any goods transferred to the other branch, all these are like outflow from the branch. Then you will get which balance? Closing balance. Then we remove the loading. Profit in which account? Branch adjustment account. Except on which one? Cash sales, credit sales, and which one? Returns. Except on the three items, you remove the loading in the opposite side. Against the opening stock, it will come as buy stock reserve. Against goods sent to branch, buy goods sent to branch. Against surplus, buy surplus the profit element. Against goods transferred, buy goods transferred from other branch like that. Don't remove loading or profit on which one? Cash sales, credit sales, and which one? Returns. Goods returned from branch, remove the loading on the debit side. If there is a normal loss, we charge what? Full amount. Abnormal loss, we charge the loading. Goods transferred from other branches, we record. Then remove the profit element on the closing stock as which one? To stock reserve. We get which one? Gross profit. Then we prepare a separate ledger for branch expenses. Record all the debtors related expenses, various other expenses you record. Then total will be transferred to branch P&L account. We prepare the P&L account, gross profit, surplus order cost element. Surplus invoice price will be here. Profit element we remove here. The net amount will come. Net amount will come. Surplus cost element will come. Same way, abnormal loss order cost element. The total of expenses are charged in P&L account. Then we find out which one? Net profit. This is which method? Stock and debtors method. Just observe this for 2-3 minutes. Thereafter, thereafter, this December 2023 question paper, I will come to that later because we have to prepare final accounts. We will come to that later. This ICA question we will solve. They ask you to prepare surplus in stock, various accounts, etc. They ask you to record. This we will do. Okay. After going through this for 5 minutes, just go through the ledger accounts for 5 minutes. It should register in your mind. Then only we can go for it. Please go through the full thing for about 2-3 minutes, once or twice. Then we will continue. Look at this question. Goods are invoiced at cost plus 50%. Goods are invoiced at cost plus 50%. If cost is 100, profit is how much? 50. Invoice price will be 150. So while removing loading, we will apply 50 by 150. Only this much data. Opening stock is given, opening debtors are given, goods invoiced is given, cash sales, credit sales, collection from debtors, returned by debtors, surplus in stock, invoice price is given, discount allowed by customers are given, expense at the branch is given. This question I will do. Next question you can try. Wait, what is the opening balance of debtors? Just look at the display sufficient. What is the opening balance of debtors? 8,700. What is the credit sales? 30,100. Any bad debts discount allowed given? No. Discount allowed. What is the discount allowed? Then any sales returns given? Discount allowed 350 is there. Goods returned by customers. Any collection from customers given? Closing balance will be the balancing. $7,150. That is closing balance of which one? Debtors. Now let us come to the branch stock account. Stock account is maintained at invoice price. What is the opening stock invoice price? What is opening stock? 15,600. Any goods sent to branch given? At cost is given. At cost is given. If cost is 100, profit is 50. Invoice price will be 150. Goods returned. Goods sent to branch. What is the goods sent to branch given? 54,000 plus 50%. 54,000 plus 50% will be 81,000. Sales returns available. Yes. 1,500. This is sales returns. 1,500. Surplus in stock given in the question. Surplus in stock they have given directly in the question. How much? 300 surplus in stock. No goods transferred from other branch. Goods transferred from other branch, goods transferred to the other branch, abnormal loss, normal loss, etc. are not available. They are not available. Cash sales, how much is available? 35,000 cash sales. Credit sales, 30,100. Any goods returned to head office? Any goods returned to head office? No. Tally this, you will get the closing balance. In the question, no abnormal loss, no normal loss, no goods pilfered or goods destroyed, goods returned, nothing is there. We tally this, you get which one? Balancing figure, the closing balance. Wait, 2 minutes, wait. On which item you would remove the loading? On which items you would remove the loading? On the debit side item, buy stock reserve on the opening stock. Buy stock reserve on the opening stock. 15,600 into, listen, if cost is 100, profit is how much? 50. So invoice price is 150. So we'll apply 50 by 150 to remove the loading. So profit element 50 by 150. On the opening stock, 15,600 into 50 by 150. This into 50 by 150. How much you get? On the goods sent to branch, 81,000 minus 51,000, 54,000 you can do, or 81,000 into 50 by 150. Then on the surplus in stock, how much? 300 into 50 by 150. How much? 100 will be there. Then on the closing stock, 33,300 into 50 by 150. Tally this, you will get gross profit. No loading should be removed. No loading should be removed on what? Cash sales, credit sales, and which one? Sales returns. So we get gross profit. We will bring the gross profit to P&L account. Okay. Branch expenses are directly given, I hope. Okay. What is the branch expenses? Bad debts, discount allowed. Discount allowed, how much is there? 350 is there. Then sundry expenses paid by head office. Sundry expenses paid by head office, how much is there? 6,700 is there. 6,700 is there. Total will be transferred to P&L account. P&L account total we will transfer. There is no abnormal loss in the question. Surplus. What is the surplus? 300 is surplus. Adale, what is the profit element? 100 is the profit element. Balance how much will come? 200 will come. Tally this, you will get the balance. 14,350 is the balance. Now what I request is, take up this, wait pannunga. Then, Try this June 2024 question paper. You can find goods are invoiced at selling price by adding 50% of cost price கொடுத்திருப்பாங்க. They ask you to prepare branch expense account, branch adjustment account, branch stock account எல்லாமே கேட்டிருப்பாங்க. The books of head office. Opening stock is given, opening debtors are given, goods sent to branch invoice price, goods returned invoice price, cash sales, credit sales, various data is given, closing stock, etc. is given to us. So for this question also, how many ledger accounts you are going to prepare? Branch debtors, branch stock, branch adjustment account, and which one? Branch expenses account. At the end, prepare which account? Branch P&L. Take it up, then try the next question. I hope there was a recording issue. I repeat for the recorded class students, I request you to try that next question or try this question after copying this. Pause the video, copy this. Have you tried this? This is for which question? June? First, let us start with which account? Debtors account will start பண்ணலாமா? Shall we? Check. Hope you tried live online friends and those who are accessing recording. Hope you have solved this and continuing from now. Okay, two balance brought down. Debtors எவ்வளவு இருக்காங்க? Credit sales how much? Credit sales is 16,32,000 credit sales. Any bad debts? Any discount allowed? Sales returns? Cash collection from debtors? 15,60,000 வரும். If you tally this closing balance, you will get. What is the closing balance? 88,800. Any doubt in it? Branch stock account will be maintained at what price? Invoice price. What is the opening stock given? Invoice price 1,20,000. Invoice price. Then goods sent to branch. Goods sent to branch. Invoice price. Then any sales returns? There is no surplus or goods transferred. What is the cash sales? 72,000. What is the credit sales? 16,32,000. Any goods returned from branch? Any goods returned from branch? 20? Any normal loss given in the question? No. Any normal loss given in the question? Normal loss is not available. Okay. Closing balance. Closing balance, how much is given?
99.
That is given in the question. Tally பண்ண tally ஆகுதுங்களா? What is the balance? 4,800 by shortage or deficit balancing figure. How much? 4,800, we get it as a balancing figure. Then we have to remove the loading. We have to remove the loading in where? Branch adjustment account. What is the cost of the goods? 100. What is profit margin? 50. So invoice price will be 150. So while removing the loading on the opening stock, 1,20,000 into 50 by 150. On the goods sent to branch, 18 lakhs into 50 by 150. Don't remove on sales returns. Goods returned from branch, how much? 24,000. 24,000 into 50 by 150. Okay. This shortage, how to treat it? Any information available? Any information about the shortage or anything given about goods destroyed or abnormal loss, etc. given? No such things are given. Or do they tell that balancing force should be taken as abnormal loss? If nothing is given, you can take it as normal loss. The shortage can be taken as which one? Normal loss. It's a very small quantity. We sent 18 lakhs. Look at what is the shortage? It is only 4,800 shortage. It can be taken as what? Normal loss. Look at the value of the goods sent. How much? 18 lakhs. Some 4,800 loss. Is it abnormal loss or unavoidable loss? Small quantity loss can be taken as what? Normal loss. It can be taken as normal loss. Full amount you can charge. Then closing stock. What is stock reserve? What is the stock reserve for the closing stock? 1,99,200. 1,99,200 into 50 by 1. Balancing for gross profit. What is the gross profit balancing for? How much? Deal. 6 lakhs plus minus then bad debts 2,400. Discount allowed how much? Sundry expense at the branch. Rent how much? Then salary. Then sundry expenses, miscellaneous expenses. 6,000. Total we can transfer to P&L account. Branch expenses. The shortage in stock, we take it as normal loss. Profit will be 4 lakh 20,200. Actually, in your suggested answer, what they have done is the branch expenses they charged in branch adjustment account. Instead of doing 1,66,600, 1,60,000, 1,40,600 in branch expenses here, they charged which one? To branch expenses. அப்படின்னு சொல்லி எவ்வளோ சார்ஜ் பண்ணிருக்காங்க 140,600. Then they walked out the net profit directly. 4,22,200. They didn't prepare branch P&L. They walked out the profit in which account? Branch adjustment account itself. But the correct and the proper answer is this. Done? Okay. Those who are yet to copy, please copy this. Then, for those who have not solved, okay, those who have completed, December 2023 model test paper இருக்கும். They ask you to prepare which account? They ask you to prepare which account? Prepare branch account in the books of what? Head office. And also debtors account கொடுத்திருக்கா. So this is coming under which system? Data system. Just prepare branch account. முன்னாடி மாடல்ல பார்த்தோம் இல்லையா branch account you do it. That is the question. Thereafter, model test paper of June 2025, where you have to prepare branch stock account, branch adjustment account, all those things they ask for. Okay, so this is stock and debtors method. Which method? Stock and debtors method. We'll do that later. So December 2023 model test paper, try it after taking up. If you have not taken up, please take it up. Then try that question. Any doubt in this? One doubt may be the shortage in the stock. We take it as which loss? Normal loss. Why it is so? Why it is so? Small amount is only involved. In the question, they have not instructed anything. They have not told this as stock lost by fire, etc. So we took it as which one? Normal loss. Please copy this. Then try which question number? Which question you are going to try? December 2023 model test. Right. live online premise the copy பண்ணிட்டீங்களா? Have you taken up? Have you taken up this?
Sir, 2 minutes.
Also completed. You are in which question? June 2024 model test paper. Then
December 20.
December 23 model test paper. First, prepare which account for that question? Debtors account, branch, debtors account. You will get cash collection as a balancing product. You will get cash collection as a balancing product. What is the opening balance of debtors? Credit sales. What is the credit sales? 30,000. Any bad debts? Any discount allowed given? 300. Then sales returns. Sales returns irka paru. Sales returns, goods returned by customers. $480. What is the closing balance given? As a balancing pool, we get cash collection from debtors. What is a balancing pool? Shall we? Start with branch account next. What is the opening stock? Opening debtors? Opening cash? Any asset at the branch? How much? Then no prepaid insurance in this question. Goods sent to branch given at invoice price. 80? Then what are the things sent for expenses? Rent how much?
1,000.
Rent how much? Salary? Then stationery? Any goods returned from branch? Goods returned from branch, 1,000. Then cash remitted from branch. Cash sales, how much is given? 50,000. Cash from debtors,
30.
so totally 80,000 remitted. No direct payments, no insurance receipt, etc. Closing balance. Closing balance of branch stock, how much?
14.
14,000. Closing debtors, 8,220. Closing cash balance, 120. Furniture minus 10%. Oh, closing cash 120. How much of petty expenses are paid by the branch manager? 280. What is the opening balance of cash? 400 rupees. Any petty cash sent by head office in the year? Any petty cash sent by the head office? No. 400 இருந்திருக்கு. Nothing is received for petty expenses. We spent 280 now. At the end of the year, how much it will be there? 120 will. Not over. We would remove the stock reserve. On the opening stock, buy stock reserve. How much? 15,000 into 20 by 120. 15,000 into 20 by 120 and over. 3,000. By goods sent to branch. What is the profit margin? 25% on cost. 25% on cost. What is the meaning? 25% on cost and the meaning. If cost is 100, profit is 25, invoice price will be 125. So we can say 25 by 125 solar or what? 1/5. 1/5. $3,000. Then goods sent to branch, 80,000 into 1 by 5. 80,000 into 1 by 5. How much? 16,000. On the goods returned, how much goods returned? 1,000 into 1 by 5. 200. To stock reserve. What is the closing stock? 14,000 into 1 by 5. How much? 2,800. Tally this, you will get 10,920 as which one? Net profit. Done. Shall we? We'll do that next question. Model test paper, which one? This one. MTP June 2025 we will do next. Thereafter we'll go for a break. Then we will continue with final account series, like independent branch, final account series, where we'll prepare trading P&L account and balance sheet like that. Then we'll do foreign branch also. Copying this. Please try this model test paper June 2025. எல்லாம் பரவாயில்ல, பாடத்தை பேசுறீங்க. இப்பதான் அதுக்கே வரணும். மாடல் டெஸ்ட் பேப்பர் ஜூன் 2025. லைவ் ஆன்லைன் இன்ஃபரன்ஸ் இந்த காப்பி பண்ணிட்டீங்களா? டேக்கன் ஓவர் லாஸ்ட் ஒன்.
Yes, sir.
It's a question, very, very small question, but good adjustments are there. Look at the question. Goods are sent at 20% less than the list price கொடுத்திருக்கான், which is cost plus 100%, with the instruction that cash sales will be made at what price? Invoice price. Credit sales will be at what price? List price னு கொடுத்திருக்கான். Wait. If cost is 100, add 100, we get which one? List price. List price 200. In this list price, credit sales takes place. List price minus 20%. 20% of 200. 20% of 200 will be 40. Okay, this is called as which price? This is called as which price? Invoice price. Invoice price. Invoice price is the price at which goods are sent and cash sales is also taking place. Invoice price is the price at which goods are sent and which one? Cash sales is also taking place. The list price is the price at which credit sales takes place. First take up this. Cost plus 100. 200 is the credit sales. List price. Minus 20%. Invoice price is the price at which we send the goods and what? Sell it for cash. Debtors account எவ்வளவு opening balance கொடுத்திருக்கோம்? 4,000. Credit sales, how much is given? Yes. 40,000. No bad debts, discount received. Any sales returns? No sales returns also. What is the closing balance given? Cash receipt from debtors given 34. Closing balance given to us. I hope it tallies. There is no further balance. Please remember, stock account is maintained at what price? Invoice price. Stock account is maintained at invoice price. That is 116. There is a typing error in the question. There is a typing error in the question. Stock at cost கிடையாது. The stock at invoice price. Stock at which price? Invoice price. Stock at invoice price. Okay. They made a typing error. Stock at invoice price how much? 4,800. Goods sent to branch already invoice price. What is goods sent to branch? There is no sales returns. Cash sales is at what price? Cash sales is at invoice price. Cash sales is at invoice price, so no problem for us. What is the cash sales invoice price?
18,400.
Credit sales is not at invoice price. Credit sales is at which price? List price கொடுத்திருக்கான். What is the credit sales list price? Credit sales how much? 40,000. Wait பண்ணுங்க. That is at what price? List price. And the surplus in credit sales over invoice price. Surplus in credit sales over invoice price. Okay. எல்லாமே invoice price இருக்கு. Everything, all the debits and credits are at what price? Invoice price. But this credit sales alone is at what price? List price இருக்கு. Invoice price to list price, what is the surplus? 40 extra. 40 by 200 into 40,000. Do you understand this removal? How 40 by 200? If invoice price is 160 plus 40, list price is how much? 200. So, what is the surplus in credit sales over the invoice price? எவ்வளவு extra credit surplus இருக்கு? 40 by 200 into 40,000. What is the surplus?
8,000.
40 by 200 into. Do you understand that 40 by 200? I repeat. If cost is 100, add 100, list price will be 200. Minus 20%, invoice price is 160. Please remember, all the entries in the branch stock account is at what price? Debit, credit, எல்லாமே at what price? Invoice price. Can the credit sales be alone at selling price or some other price? No. அதோட surplus மட்டும் remove பண்ணிடுங்க. 40 by 200 into 40,000 is how much? 8,000. Any goods returned from branch? 400. 400. Then closing stock is given to us. What is the closing stock is given? 7040. Tally all. இன்னும் balance இருக்கு. What is the balance? இப்போ 240 இருக்குன்னு நினைக்கிறேன். This is surplus in stock. Surplus in stock. It's a balancing group. I repeat, this opening balance, goods sent to branch, cash sales, goods returned from branch, closing balance, everything is at what price? Invoice price, now cost plus the list price minus 20%, 160%. But credit sales alone is at what price? List price, look at a surplus, that is excess over invoice price. So this will give us surplus in stock. Surplus in stock. Wait பண்ணுங்க. Branch adjustment போடும்போது pay attention. Branch adjustment account போடும்போது goods received from branch. Goods received from branch எப்படி work out பண்ணுவீங்க? Profit element எப்படி remove பண்ணுவீங்க? 100 by 160. 100 by 160. How 100 by 160? If cost is 100, invoice price is how much? 160. So, profit element you will remove by putting 60 by 160. 60 by 160. So, opening stock போடும்போது 4,800 into 60 by 160. Goods sent to branch போடும்போது 52,800 into 60 by 160. Then, by excess credit sales price. What is excess credit sales price? 8,000. That is not a surplus, please. Or you can say excess credit sales price. Credit sales price over which one? Invoice price. That 8,000 will come. Then by surplus in stock. What is the surplus in stock? What is the surplus in stock? 240 into 60 by 160. The profit element. 240 into 60 by 160. Surplus. Goods returned from branch. Goods returned from branch. Profit element. 400 into 60 by 160. No normal loss. Closing stock order profit element 7040 into 60 by 160. Any branch expenses given in the question? Any branch expenses given in the question? No branch expense given in the question. Oh. How much? 6,000? Gross profit, you bring it. Then by surplus in stock cost element. Cost is 240 minus what? 90. 240 minus 90, 150. The balance input will be net profit. Any doubt in it? In ICMA suggested answer, they've done some calculation errors. Okay, but this is the correct answer. So take up this. We'll go for a break. Breakfast break. Time is 8:45 now. So we'll start by 9:15. We'll start by 9:15 where we will see which one. The independent branches under final accounts method, independent branches we are going to see. Then we will see which one. Foreign branch question also. Pretty. Gross profit amount how much? 26. Okay. 26 done. Live online friends, am I audible? Shall we restart? Those who are accessing recording, I hope you had a break and continuing with that. Otherwise, stop the video, have a break and continue. Shall we? Next one. We'll move on to which one? Final accounts method. We'll move on to which one? Final accounts method. Final accounts method. Normally, independent branches follow final accounts method. Independent branches follow which method? Final accounts method. Where you prepare a trading P&L account and a balance sheet. You prepare a trading P&L account and a balance sheet. Okay. We'll see which question we left in between. Which question we left in between? This question we left in between. Ilya. H Limited has a retail branch in Puri. Goods are sold at what? 60% profit on cost. Wholesale prices cost plus 40% கொடுத்திருக்காங்க. Then goods are invoiced at wholesale price. Wait பண்ணுங்க. When cost is 100, we add 60%. Selling price is 160. Selling price is how much? 160. Wholesale prices cost plus 20%. If cost is high, 100 plus 40, wholesale price is what? 140 in artham. Then goods are also invoiced at wholesale price. Goods are also invoiced at wholesale price, that is 140. Read the question. Goods are sold at 60% profit on cost. And goods are sent at wholesale price. What is wholesale price? Cost plus 40% is given to us. Okay, opening stock, purchases, goods sent to branch at invoice price is given. Sales is given to us. Closing stock is given to us. Expenses are given to us. Then, sales are made by the head office at what price? Wholesale price. Head office is selling the goods at wholesale price. Branch is selling the customer at what price? Retail price kuduthirka. Stock at the head office is valued at what price? Head office is valued at invoice price kuduthirka. All the best. Read the question once again. That's all. Only this much. Shall we? This question was taken from your study material. Start. December 2023 question paper. Trading profit and loss account for the year ended 31st March 2023. We'll maintain columns in which we'll do that. Head office, branch. Start. Shall we? To opening stock. Opening stock at invoice price for the head office. At invoice price. Head office oda stock invoice price la da irukku. What is invoice price? Kuduthirukka paru. Stock at head office is valued at what price? Invoice price. How much is given? 7 lakhs. Then for the branch there is no opening stock. To purchases. What is the purchases at head office? What is the purchase at office? 42 lakhs. Then what is the next one? Goods sent to branch. What how will you record this goods sent to branch? Debit the receiver, credit the giver. Yaar receive பண்ணுவாங்க? Branch will receive 15,12,000. Branches will receiving 15,12,000. Head office is sending. So buy goods sent to branch 15,12,000. Credit the giver and debit the receiver. Wait, what is the price at which the goods are sent? Which price goods are sent? Invoice price. This will be at invoice price. This will be at invoice price. Then by closing stock. Okay, by sales. What is the sales given for head office and branch? 42,84,000. For branch, how much is given? 14,40,000 is the branch order sales. By closing stock, head office will be at invoice price. Head office will be at invoice price. Head office will be at invoice price. How much? 16,80,000. 16,80,000. And this is how much? 2,52,000. Okay. When you tally this, you will get gross profit as a balancing for. Please take it up. Pick up this, then we will continue. By gross profit, you will get. Please remember, we are not doing stock or adjustment account, etc. We are just doing which one? Trading P&L account. Trading P&L account. Wait, if cost is how much? If cost is 100, profit is 40, invoice price is 160. This is what is given as wholesale price. Invoice price is nothing but wholesale price at 140. Stock is valued at what price? Invoice price. Stock is valued at what price? Invoice price. Let us remove the stock reserve. By stock reserve, opening stock, how much is there? 7 lakhs into 40 by 140. Then okay, expenses are given. Sundry expenses are given. Sundry expenses are given. How much sundry expenses are given? 80,000, 40,000. Stock reserve on the closing stock. Stock will be at what price? Invoice price only. Let it be head office. Head office is also invoice price. Branch also will be at what price? Invoice price. Goods are sent at what price? Goods are sent at what price? Invoice price. So stock will be at what price? Invoice price. So this 16,80,000 into 40 by 140, and this 2,52,000 into 40 by 140. Why stock reserve is removed in the head office column? Because profit is charged by whom? Who is charging the profit? Head office. So from the head office column, profit will be removed. This is one method of solving the question. Alternative method is you can record at cost price. Automatically you can record this at what price? Cost price. What is invoice price? 7 lakhs. What is the profit element? 2 lakh. Minus over. Cost 5 lakh you can record. Same way, closing stock, selling price minus there is profit, you will get what? Cost you can record. But this is a proper way of doing that. Sir, where are we going to use this cost 100, add 60, selling price 160, etc. Where are we going to use this? We have not used this in this question. We have not used this question because nothing is given based on, say, this in selling price. Nothing is given based on what? Selling price. That's all. Trading P&L account for the year ending 31st March 2023. Over? Is it over? Live online friends? Is it completed? Over? Because head office stock will be at invoice price, branch stock also will be at invoice price. We just remove the loading. We just remove the loading in the opposite side. No need to remove loading on goods sent. Why? Why? Debited in branch, credited in what? Head office. defect will be nullified. உங்களை credit பண்ணிருக்கோம் நான் debit பண்ணிருக்கோம். Goods sent to branch zero ஆயிடும். One காலத்துல debit பண்ணிருப்போம், another காலத்துல it would have been what? Credited. Only from the stock you have to eliminate loading in which one? Final account system. Stock and debt assets எல்லாத்துலயும் eliminate பண்ணுவோம். Opening stock, goods sent to branch, goods returned, closing stock எல்லாம் remove பண்ணுவோம். Because are we maintaining a trading P&L account or adjustment account? Only adjustment account we are doing. அதனால தான் remove பண்ணுவோம் loading. Done? Shall we proceed?
Yes, sir. Yes, sir.
Good. Which question next? Shaw commenced business on 1/4/2016. Shaw commenced business on what date? It's a very good question and a lengthy question also. Shaw commenced business on 1/4/2016 with head office in Mumbai and branch in Chennai. Purchases are made exclusively by what? Head office. Where goods are processed before sale. Who's processing the goods? Head office is manufacturing the goods and sending it. There is no wastage in processing. Only the processed goods are received from head office and handled by what? Branch. These goods are sent at cost plus 10%. These goods are sent at cost plus 10%. So we have to find out what is the goods sent to branch, closing stock, etc. In the question, goods sent to branch 9,24,000. They have given opening stock, purchases, cost of processing, etc. is given to us. Goods sent to branch is given to us in the question. Goods sent to branch is given in the question. Otherwise, they received only what? 8,80,000. 8,80,000 they received. Goods sent by head office, 44,000 is not received by the branch, now that is goods in transit. Remittance not received by the bank, now that is cash in transit. There is nothing but what? Cash in transit. Stock at the branch disclosed a shortage of how much? 20,000 at selling price to the branch. Then cost of unprocessed goods na raw material. Cost of raw material is given to us. Cost of raw material closing stock is given to us. Once again, who's purchasing the goods? Raw material, head office. Who's manufacturing? Head office. Goods are sent to the branch at cost plus 10% is given to us. We are given purchases, cost of processing the goods sent to branch எல்லாமே கொடுத்திருக்காங்க. Of course, sales we will take it in trading account. Then goods received from head office. There's a difference. Sent how much is there? 9,24,000. In that what is received? 8,80,000. Why? There is a goods in transit of how much? 44,000. This 84,300 is cash in transit. Cash in transit. Closing stock, there is a shortage at selling price at the branch. Cost of unprocessed goods means raw material. Raw material. What is missing in the question? To solve the question, trading P&L account prepare missing. What is the closing stock of head office? Raw material. Finished goods or detail. They have not given which one? Value of closing stock. Value of closing stock at the branch is also missing. Two information is missing. Value of closing stock at head office is missing. Then value of closing stock at branch is missing. Both are missing. They ask you to prepare trading P&L account and which one? Balance sheet. Start. First, observation notes, then let us continue. Value of closing stock, finished goods, or you can say processed goods. We have to find out. Then what we have to find out? Value of stock at branch. We need to find out. Start. First, let us do this. Okay. Any opening stock of finished goods given? No, not given. Then how to find out raw material consumed in the production? Opening stock plus purchases minus closing stock of raw material. Raw material is nothing but unprocessed goods. What is the opening stock given? No opening stock given. Plus purchases எவ்வளவு கொடுத்திருக்கான் பாருங்க. Purchase 19 lakh 69,000 19,69,500 minus closing stock adjustment ல கொடுத்திருக்காங்க. Point number 4 1 lakh. This is like your cost sheet we are doing. Then this is like prime cost. Add manufacturing expenses. Nothing but production cost. What is the production cost? What is the production cost? Manufacturing expenses. 50,000. Add panningana, you will get total cost of production. What is the total cost of production? This one. 19,20,000 is the cost of production. This is what we manufactured. Less cost of goods sent to branch paranga. Then less cost of goods sold. You will get closing stock. See, this much we manufactured. In that some goods are sent to the branch. In that some goods are sold out. Now head office வச்சுக்கலாம். Manufacture பண்ண goods என்ன பண்ண போறோம்? Branch அனுப்புவோம், sale பண்ணிருப்போம். Find out the cost. Then balancing for will be what? Closing stock at what price? Cost price. How to work out? Simple. If cost is 100, if cost is 100, we add how much? 10%. And then goods sent to branch will be 110. Goods sent to branch will be 110. Goods sent to branch or value 9,24,000 na cost low. Any doubt in it? If cost is 100 rupees, we had a profit margin of 10. Goods are sent to the branch at 110. So what is the cost of goods sent to the branch? 9,24,000 into 100 by 110. We want cost, not profit. This is the cost of goods sent to the branch. Cost of goods sold. If cost is 100, we are selling at a profit of goods are sold. Goods are sold at a uniform rate of 25% on their respective cost. Profit will be 25. Profit will be 25. And selling price is 125. Selling price is given. How much is given? Head office paranga. Sales at head office. 12,80,000 கொடுத்திருக்காங்க. What is the sales at head office? 12,80,000. If the selling price, what is cost? $12,80,000 into 100 by 125. This is the cost of goods sold out. Balance will be closing stock. 19,20,000 minus 8,40,000 minus 10,24,000 will be the closing stock at head office at cost price. Normally this will be given as an adjustment. This is missing. We worked out. Closing stock at what price? Cost price. Any doubt in it? goods are sent to branch at what price? Invoice price. So let us value the stock. At what price we are going to work? Invoice price we are going to work. We are sending the goods to the branch at what price? Invoice price. So let us work out the stock at what price? Invoice price. Okay. Now branch is closing stock we want to work out. What is the opening stock at branch? Not given. Okay. Goods from head office at invoice price. Whatever is received by the branch. Whatever is received by the branch only will go to the branch, right? Remaining will be called as goods in transit. How much they receive? 8,80,000. 9,24,000 we sent. But branch how much they received? 8,80,000 they received. Then what is the next one? Less invoice price of goods sold. Simple. If invoice price is 100, we add profit margin 25%. We add profit margin what? 25% and fix the selling price. It's not cost plus. Look at this. Head office or by the branch where uniform GP on their respective cost on their respective cost. When we are selling the goods, sending the goods at invoice price, okay, that will be their cost for them. So what is a good sold? What is a good sold? What is invoice price of the goods sold? What is the sales at branch? 8,20,000 into 100 by 125. This will give us invoice price of goods sold. Invoice price of goods sold. How much? 8,20,000 into 100 by 125. 6 lakhs. 56,000. Normally we should get closing stock, but there is one more data given. Look at this. What is the data given? There is a loss of stock 20,000 at what price? What is the loss of stock? 20,000 at what price? At selling price given. So less stock lost or invoice price of stock lost. $20,000 into 100 by 125. This is invoice price of stock lost. How much? So this will give us closing stock of branch at invoice price. So what is the closing stock of branch at invoice price? So normally this will be given in the question, but the question is this is missing, so we worked out all these things. Now we can prepare which one? Trading P&L. Let us start with trading P&L. Any opening stock available? What is opening stock? Not there. Purchases. What is the purchases? Then to processing cost. Processing cost is a direct expense that will come here. What is the processing cost? 50,500 is processing cost. Then goods from head office. What is a goods sent? 9,24,000. Debit the branch, credit the giver. By goods sent to branch. What is a goods sent to branch? Head office column 9,24,000 will come. Goods in transit. Goods in transit, how much is there? 44,000 will come in the branch column. By sales. What is the sales? $12 lakh 80,000 for head office. For the branch, how much? 8,20,000. Then by closing stock. Closing stock, we have got raw material. Now raw material is nothing but unprocessed goods. Unprocessed goods, so the closing stock, where it is there? Head office column, it will be there. Then processed goods means finished goods. Finished goods, how much is there for head office? How much is there for head office? Finished goods. 56,000 and what? 56,000 and we worked out 2,08,000. Please remember this 2,08,000 is at invoice price. This 2,08,000 is at what price? Invoice price. I repeat, opening stock is not there, purchases are there, processing cost is given, goods from head office, debit the receiver, credit the giver. Closing stock available, closing stock is available. Raw material means unprocessed goods, finished goods means processed goods. Anything else we have to record? Think and tell me. Anything else that we have to record? There is an abnormal loss of goods. What is the journal entry for abnormal loss of goods? What is the journal entry for abnormal loss of goods? Abnormal loss account data to trading account. How much abnormal loss? Abnormal loss account data to trading account. How much you have to charge? 16,000. Then this abnormal loss will be later on charged in P&L account after adjusting insurance claim. After adjusting which one? Insurance claim. This we have done in final account chapter, single entry chapter, loss of goods chapter. Abnormal loss account data to which account? Trading account. How this will come? By abnormal loss. What is abnormal loss in branch? 16,000. Abnormal loss account data to which account? Trading account 16,000. Tally this, you will get the gross profit. Right? That abnormal loss minus insurance claims. Is there any insurance claim? Abnormal loss, but is there any insurance claim? No insurance claim. That will be charged in P&L account. How much will be charged in P&L account in this question? Full 16,000 would have been charged in which account? P&L account. Suppose if insurance claims is 5,000, என்ன பண்ணிருப்பீங்க? 16,000 minus 5,000, 11,000 நீங்க charge பண்ணி. Buy stock reserve will not be there. To stock reserve you have to eliminate. To stock reserve you have to eliminate. But apart from that, I hope administration and selling expenses are given. What is administration expenses? And what? 15,000. To selling expenses. Selling expenses for head office, how much? 50,000. The other one is 6,200. 6,200. Then, by stock reserve on the opening stock. Not there. No. Why? Opening stock is not there at all in this question. Opening stock is not there in the question. To stock reserve on the closing stock of branch. Wait. What is the closing stock of branch? 2,08,000. What is goods in transit? 44,000. Both will have this. 2,08,000 plus goods in transit how much? 44,000 into 10 by 110. How 10 by 110? Goods are sent at cost plus 10%. So 2,08,000 plus 44,000 into 10 by 110. This loading will be removed in head office. Tally this, you will get gross profit. The question is not over. The question is not over. They ask you to prepare which one? Balance sheet also. So I repeat, what did we work out? Closing stock of head office at cost we worked out. Since goods are sent at invoice price to the branch, we worked out closing stock at branch at what price? Invoice price. Then we prepared which account? Trading P&L account, and we are asked to prepare which one? Balance sheet also. Balance sheet will be a single column. Not head office and branch, it is total. What is the capital given per? How much? 2 lakh? 3,10,000. Add net profit of head office. Net profit of head office. Add net profit of branch. No drawings in this question. Total to the outer column. Then creditors of head office plus branch. How much creditors of head office and branch? Add both. Creditors of head office and branch. The 6 lakhs 1,400, 10,800. 6 lakhs 1,400 plus 10,800. Add both and record. Then debtors the same manner. Head office plus branch. Add pannu. Debtors of head office plus branch. Add and tell me. Four lakh 33,000. 4,23,200. Then closing stock of raw material. What is the closing stock of raw material with head office? How much? 1 lakh. Then finished goods means processed goods. Finished goods are there with head office. How much head office finished goods? 6,000. Branch is at invoice price. Branch finished goods are there at invoice price. Then in transit. Abnormal loss already adjust பண்ணியாச்சு. In transit. In transit எவ்வளவு இருக்கு? Finished goods. All these are finished goods. How much lost in transit? How much lost in transit? Sorry, in transit. 44,000 is there. Minus stock reserve. Stock reserve we worked out. What is the stock reserve? 22. Net amount, the finished goods will come. I repeat. Raw material with head office is there, that 10,000. Finished goods are there with which one? Head office. Finished goods are there with branch, and finished goods are there in transit, minus stock reserve. Then what else will come? Whether asset record, any other asset is there? There is one more thing. Cash in transit part. What is a cash in transit? Cash sent but not received. How much of cash remittance not received? 84,300. 84,000. $84,300. Bank balance of head office plus branch. Bank balance of head office plus branch. Add both and tell me. 229,500. Drawings irken. Yes, sollaville. Drawings how much? Closing stock of raw material with head office, finished goods at head office, finished goods at branch, finished goods in transit, minus stock reserve will give us finished goods value. Cash in transit, remittance sent not received, then the bank balance of head office plus branch will come. It's a very good question. If this model question is asked, it will be for how many marks? 14 marks. 15 marks question. 14 marks question. Now so many data we have to work out. Look at, You have to work out which one. Value of closing stock at head office and branch. Prepare trading P&L account and prepare what? Balance sheet for head office and branch we have to prepare. Instead of asking final accounts question, they can ask this. Final accounts, what do we do? Trading P&L account and a balance sheet. We are preparing trading P&L account for head office and which one? Branch with the working of which one? Closing stock, stock reserve removal, everything is tested in one single question. Shall we? What is the next area? Foreign branch. The last part is foreign branch. So far, they have not tested foreign branch in the last 3-4 years. So there is a chance that they may ask it. Regular class questions you must go through. 3 or 4 questions are there. We'll learn foreign currency trial balance converted into home currency trial balance. We'll prepare trading P&L account and balance sheet. What I'm going to solve over here is one question based on your the model test paper. Of course, regular class we will run 3-4 questions based on foreign branch that you must go through. Live online friends, have we copied this? Any doubt in this live online? See, abnormal loss, where do we credit and debit? Abnormal loss recognized in trading account. P&L account after insurance claims it is charged. After insurance claims it is charged. Capital we add net profit minus drawings. We get the net amount to the outer column. It's a consolidated balance sheet of head office and branch. So both head office and branch assets are included. Cash in transit means remittance but not receipt. Bank balance of head office and branch, we take it. Or do we remove stock reserve only for the closing stock of the branch? The closing stock will be at what price? Invoice price. Closing stock will be at invoice price. We remove the loading. Closing stock and transit into 10 by 110. Balance sheet la போடும்போது finished goods of head office will be at cost price. Branch both in transit item and goods will have invoice price. Minus the profit element, you will get which one? Net value of goods. Cash in transit, remittance that is not received. Bank balance of head office and branch is there. If there is any other asset like plant and machinery, furniture, we will add input. Done. Live online friends, complete printing once again to verify with you before I proceed.
Yes, sir.
All of this have you completed? Done. See, we apply AS11 for converting foreign currency into which one? Home currency. Okay. This is the exchange rate we will use. Opening balance of current assets and current liability at what rate? Opening rate. Closing balance of current assets and current liability? Closing rate. Transaction between head office and branch? Actual values. Transaction throughout the year at the branch, we will take it at what rate? Average rate. Fixed assets will be converted using which rate? The rate prevailing at the time of their purchase. Liabilities at the end of the year will be converted using which rate? Closing rate. Difference in trial balance will be taken as what? Foreign exchange gain or loss. I repeat, all your current assets and current liability at the beginning of the year. Use which rate? Opening rate, here beginning rate. Closing balances, rate at the end of the year. Any transaction between head office and branch, any transaction, ledger balances, cash sent, goods sent, the rate, actual rates. Transaction happening throughout the year, like purchases, sales, expenses, incomes at the branch, will convert using which rate? Average rate. Any fixed asset purchased in the past, we'll take the rate at the time of their purchase. Then liabilities at the end of the year. Okay, we'll take liabilities and borrowings at what rate? Closing rate. Difference will be taken as what? Forex gain or loss. Shall we? Look at this question. SS Textiles has a branch in Auckland, New Zealand. Okay. The trial balance is given us on 31st March 2023. Okay. We have to fix the rates of exchange. We are not going to solve. We will see the solution. Head office account, we will take actual value. What is actual value available? 13,20,000. So converted trial balance for this equivalent value will be what? 13,20,000. 13,20,000 given. Sales we will convert using which rate? Average rate. Okay. What is the average rate given? 90. Average rate 90. Then goods from head office we will take actual value. What is actual value? 80 lakhs. Goods from head office we will take which value? Actual value. Opening stock we will take which rate? Opening rate. Opening stock we will take opening rate. At the beginning of the year it is 88. At the beginning of the year it is 88. Then office furniture, look at this. Office furniture was acquired in 2021 when the exchange rate what was? 80 kuduthirukanga. We'll take it at 80. We'll take it at 80. Closing cash balance, bank balance, expense outstanding, we'll convert using closing rate. What is the closing rate? 92. Outstanding expense also. liability at the beginning of end of the year, closing rate. Then salary, taxes and insurance, rent alla average rate. What is the average rate? 90. Closing debtors will convert using which rate? Closing rate. They ask you to convert the trial balance into rupees and prepare what? Trading P&L account and a balance sheet in an office book. Just go through once again. We will just see the solution as I said. Okay. Head office account, they took which value? Head office account, they took which value? Actual value. Sales average rate. Goods from head office, actual values, actual value. Wait பண்ணுங்க, the credit இருந்தா you would record in credit. இங்க debit இருந்தா you would record in what? Debit இந்த மாதிரி. Opening stock, opening rate they have taken. Office furniture historical rate they have taken. Cash and bank expenses outstanding all taken at what rate? Closing rate and converted. Salaries, taxes, rent, average rate they have taken. Debtors they have taken which rate? Average rate. You find there is a shortage of 21,000 coming in the debit side. 21,000 coming in the debit side. Difference in exchange. Difference in exchange 21,000 வருது. Okay. This difference in exchange is the gain or loss. Difference in exchange gain or loss. We are not doing P&L account. Please remember we are not doing P&L account. We are doing which one? Trial balance. Okay, losses will have which balance? Losses will have which balance? Debit balance. Losses will have debit balance. So 21,000 is a loss. 21,000 is a loss. Otherwise, credit represents payable. Credit represents payable. Debit represents receivable. Your payables are more than receivables now. Loss or gain? Payables are more than receivable. It's a loss. It's a loss. Okay. Then the closing stock will be converted using which rate? Closing rate. They prepare the trading P&L account. Opening stock converted value, sales converted value, goods from head office converted value, closing stock at closing rate, tally panna over. Gross profit you get. Thereafter, bring the gross profit, charge all the expenses, salary, tax, rent, depreciation 10% on the asset value, exchange loss is recognized here, tally panna, what do you get? Tally panna, what do you get? Net profit. Outstanding expense will not come in the P&L account. Why? This outstanding expense is given as an adjustment or trial balance. Trial balance, it will directly go to balance sheet. We are just asked to prepare trading P&L account. That's it. We are just asked to prepare which account? Trading P&L account. So I request you to see the solution from your this one. Just go through. Head office account, they have taken which value? Actual value. Sales, they convert into using which rate? Average rate. Sales, they converted using average rate. Then, what else? Goods from head office, actual values are taken. Opening stock, opening rate. Office furniture, historical rate, 80 rupees. Cash, bank, expenses outstanding, all at the end of their closing rate. Expenses, average rate they have taken. Debtors, closing rate they have taken. Difference in exchange is a loss. Difference in exchange is a loss that will be recognized in P&L account. Then they prepared opening stock, goods from head office, sales and closing stock they have recorded. Then bring the gross profit to P&L account. Record salary, taxes, rent. That loss is recognized here. Depreciation of 1,60,000. Asset value, converted asset value. What is the converted asset value? 16 lakh into 10%. 16 lakh into 10%, 1,60,000. Tally this, you get which one? Net profit. Apart from this, as I told you in the initial classes, you must go through which one? ICMA trial balance also. That is questions also. The same question was given. You know, the study material question now. They have given in model test paper, the same question. The same thing. Difference in exchange how much? 21,000 they have given. Only one question they have given, and they have given in model test paper. Done. So this is about which accounting? Departmental accounting. Sorry, branch accounting. Next one, departmental accounts, we have done in the class, the same problem would have been repeated in your material also. Okay, they would have prepared with trading P&L account, opening stock, purchases, carriage inwards, all apportionment of expenses they would have done. Then they would have calculated what? P&L account. They would have calculated P&L account net profit in the market. In the question, very famous. Okay, the illustration, which one? It is very, very famous. You must go through. You must go through. Departmental accounts also I touch upon, though it is branch accounts revision. Illustration 15 and the please note departmental accounts raw material and manufacturing department. Raw material and which one? Manufacturing department you must go through. That is repeated in the exam, past questions. The Madri illustration 15 you have to go through, 16 you have to go through, 16 you have to go through. Then this one, this model we have done. This is the first question we have done in class. Opening stock purchase purchase at a total cost something we will work out gross profit ratio and find out the market. First question in our departmental accounts. Illustration 19. This you must go through. Then we would have done this question and the rectification of errors. Okay, we would have done this. Net profit given. Add back what? Add back wrong commission. We'll eliminate unrealized profit and we'll find out which one. Correct commission and the money model question. Rectification of error question. Net profit as per P&L account put it. We'll add back which one? Wrong commission. We'll eliminate what? Stock reserve, then work out correct commission. And the Mari questions are also tested in the exam. So that also you have to go through. Which illustration? Which illustration number? 19 you have to go through, I told you already. Then this illustration 20 also you should go through. So departmental accounts classroom questions you go through plus one. These 3 or 4 illustrations you must go through, especially illustration number 15 and 16 are repeated in the exam. Then other things, but it will be in the similar model to whatever we have done in the class. So with this, what is over? Branch account revision is over. Hi friends. Yes, so with this we stop our revisions.